Hello everyone, it's Wednesday, November 5. Today we will analyze the charts of the euro and British pound to assess potential market movements. Both currencies faced pressure during the previous trading day due to a stronger US dollar, but there were no significant fundamental drivers behind the greenback's rise. Tuesday's macroeconomic calendar lacked important releases from the euro area, with only speeches from ECB officials. ECB representatives reiterated that the current monetary policy is adequate, noting an easing of inflation toward the regulator's target level. In contrast, Federal Reserve officials remained cautious, maintaining a wait-and-see stance, which contributed to uncertainty regarding future U.S. monetary policy. It remains unclear whether the Federal Open Market Committee will proceed with further interest rate cuts in December or opt for a pause. In addition, recent sell-offs in stock and cryptocurrency markets, combined with a broader strengthening of the dollar amid easing trade tensions between the United States and China, have resulted in weaker performance for risky assets. Overall, the market sentiment favors dollar buyers. Turning to today's macroeconomic calendar, we have a series of statistics from the euro area, including data on business activity. The Eurozone Services PMI for October is estimated to be 52.6. If the actual figure meets or exceeds analysts' expectations, the euro could gain momentum and initiate a bullish correction. Similar data is anticipated from the UK, where the Services PMI is forecast to rise to 51.1 after a decline in September. If this figure is revised upward, the pound sterling may have an opportunity to recover from yesterday's losses. Notably, yesterday's comments from the UK Prime Minister regarding the necessity of approving tax increases, along with Finance Minister Rachel Reeves, similar sentiments disappointed pound buyers. This contributed to a steep sell-off of the pound, which contributed into today's Asian's trading hours. On the US side, traders will be watching the ISM Services PMI, which is expected to remain above the 50-point threshold. Besides, the ADP Employment Change Report will draw significant attention from market participants. It is estimated that the private payrolls rose by 31,000 jobs in October, following a decline of 32,000 in September. Please bear in mind, challenges in the US labor market have been a key factor in the Federal Reserve's recent rate cuts. Therefore, if today's data outperforms expectations, it could lead to a potential pause in the Fed's rate-cutting strategy. This in turn could put downward pressure on the dollar. Now let's move on to technical analysis. The 1-hour EUR USD chart indicates that a false breakout at 14.99 would generate a sell signal, potentially dragging the euro down to 1.1461. A break below this level would lead to a decline to 14.28, where it would be wise to consider going long on a rebound, aiming for a 25-30 pip move. Long positions at 14.61 could be considered on the false breakout. Alternatively, entering long positions would be prudent after a break in consolidation above 1.1499, especially if supported by upbeat services activity data. This could drive the euro up to 15.37 and likely pave the way for further gains toward 15.74. At this level, I would recommend going short on the rebound, targeting an intraday correction of 30-35 pips. Short positions at 15.37 and 14.99 would be relevant only after a false breakout. Speaking of the British pound, the situation is quite complicated. Nevertheless, sterling has a chance for a bullish correction, especially if the services sector, the main driver of the UK economy, shows strong growth in activity. If the price consolidates above 1.3032, this would present an opportunity to add long positions, putting sterling up toward 1.3064. A break above this level would open the path toward 3097, where it would be wise to go short on the rebound, anticipating an intraday correction of 30-35 pips. Short entries at 30.32 could be considered on the false breakout, especially amid weak data on UK services activity. A false breakout at 30.64 would also provide a selling opportunity, with a key target for bears at 29.86. A break below this mark would pave the way for further losses toward 1.2929. At this level, I would recommend going long on rebound, targeting an intraday correction of 35-40 pips. Long positions at 1.2986 would only be prudent after a false breakout. Best of luck to everyone.